Today's seminar is how to raise capital for your next real estate deal. We're doing this seminar to educate all of our members in where they need to go when they run out of financing or capital themselves. They need to go out there, go into their, sphere of influence and raise some capital to do more real estate deals.
Yeah, and the funny thing about capital is we've worked with investors for over 20 years, and investors always run out of one or two things. The first normally being capital, cash, and the second being the ability to get financing. So it doesn't matter if you're just starting off, it doesn't matter if you're in 10 houses. This is a cycle that investors go through, and depending on how far you want to grow your portfolio, you have to get good at this. You have to learn about it and educate you. And that's what we do for our clients. And we've got clients that end up owning multiple properties. And there is a system to that. So for you lucky people tonight, we're going to go through that system in detail. Let's get into it.
How to raise capital for your next real estate deal. Again, we want to do this seminar to assist our investors in going out there, finding that capital, and keep on moving, keep the ball rolling with your real estate investments. We don't want people to get stuck because they run out of financing. You can always go out there, find partners, find money somewhere. And we're going to go through in very much detail how to do it step by step so that you can keep your success going and not get stuck at a certain level of real estate. Speaking of raising capital, the couple on this slide here, they're standing in front of their Ogden house that they bought about 6 months, not even that long ago, 4 months ago. And the way they raised capital for this purchase was a good old-fashioned refi.
Mm-hmm.
Yeah, so they refied, was it a rental property and their principal?
Yeah.
Yeah, so it was two properties in one so that they can get enough capital to put a down payment on this next rental property of theirs, and they're going again.
Yeah, and just to quickly explain this property, they're mostly weeds in that garden that you see. It's in Ogden, up the top there. What I love about this property, just so everyone can get an idea how we help people, they actually use one of their kids to help qualify for this. They moved one of the kids into the basement. We're in the middle of renovating the basement right now. It was legally suited. We're actually taking it from a 2-bedroom to a 3-bedroom suited property in the basement so we can get more rents. And it comes with a 4-car garage, and it's on a massive 50 by at least 100, 110.
120 foot.
120, massive lot up in Ogden. The new C train station is going to be at the bottom of the hill. So you got to look for these things when you're investing. And then on the same street, they've actually got 8-plexes, 4-plexes, got a 4-plex directly across the road that has just been built. So we know we want to hold this property for 10 years, rent it out, cash flow off it. They're using us for the property management. So they're doing nothing. They're using us for the renovations right now. So it's kind of like turnkey for them. And in 10 years' time, they have the option to team up with a builder and build exactly what's across the road, or just sell it as is and probably walk away with a few $100,000 by then. So that's how we help simple people that they live down in Acadia, not far. This is their second rental property. And it's been a success. It's been a ride. So we're going to get into the presentation right now. There's a lot of information. This is where we start to talk a lot. And if anyone has any questions about anything we're talking about, please put it in the chat, because it's very important to understand this process of raising capital.
Yeah.
Yeah. So when you're raising capital, you're not asking for money. You are presenting your expertise in real estate, and you're getting people to buy into your business plan, your plan.
I love that. I love that because, that's the worst thing you can do is ask people for money. People are already excited about real estate. This is what I didn't realize when I started investing in real estate. And that's why people watch these shows. I personally can't watch the shows. I'm sure Carly watches the shows. Selling Manhattan, is that one of them? My kids, Selling Sunset. My kids watch it. They tell me, Dad, you got to watch this. You got to watch this. And I'm like, okay, I'll watch it. But people are generally excited about real estate. And you know what? I'm telling you, it's changed our lives. It can change your lives. And it can change your friends, your family, your kids' lives. And we're actually helping people do this. And that's what we love. And that's why we put on these sessions. But you're selling an opportunity, okay? And we're going to teach you tonight exactly how to sell it, so you're not coming across as a cheesy investor, all right?
Yeah, you're not begging for money.
Yeah, you're not begging. You're actually you're actually showing people what you're going to do or what you've done, and you're going to just explain it in a way that they can participate as well. And that's what I love it. And I've pulled this off with my father-in-law in Winnipeg, and I tell this story a lot. He's the most simple guy you'll meet. He was an accountant at St. Boniface Hospital for maybe, I don't know, 30, 40 years, and paid off his house and retired. And I even got him excited in investing in real estate and made him a lot of money. And I'll share how I made him a lot of money later on. But if I can do that to someone that really, you know, didn't think about investing, had made all the money he wanted, and then we end up making enough money to go get a vacation property on Lake Winnipeg and changed his life. So you know what? You can do it too.
Yeah, and ever since the banks, well, not ever since, the banks have been tightening lending rules for the last 10 years, ever since the financial crisis. So as they tighten more rules, make access to capital harder to get, slowing down real estate investors, you need to go out and find alternative sources of capital. We're going to go through a lot of those alternative sources and how to precisely go out and get them and how to present yourself so that you can attract capital and you can continue your real estate investing. There's nothing worse than going to the bank for your second property or your third property and getting a flat out no. When that happens, most real estate investors don't quit. They just shift their focus and get the capital somewhere else. And we're going to go through ways and strategies to do that. So bear with us because, like Azad said, there's a lot of information to go through.
So when you're asking for capital, you have to be clear on what it's for because different strategies are going to attract different people. Somebody who wants to invest in kind of a quick flip where you're in and out in a few months may not be the same person that's investing in a long-term hold.
Yeah, is that Dennis on the
That's
back there?
Dennis.
Okay, I couldn't work out who it was. So Dennis here, he doesn't like us talking about him, but he's actually in Willow Park right now doing a renovation, and he's doing the burr. So this is the perfect way to get ahead. This is his second burr. This is probably his fifth investment property.
Yeah.
But his way of raising capital is doing the burr, releasing the money out, so renovating. He's doing a major renovation. We're actually putting it on YouTube. You guys will see all the renovations. But we bought that for $550 during Christmas, and on the same street, renovated properties are selling for $950 in Willow Park. So there is a massive amount of room in there for him to actually pull equity out and go again. But you have to identify exactly what Carly's saying. You have to identify on what you can do on your own with that capital. So you have to work backwards. You have to find out what financing you can obtain and then what kind of deposit you'll need. If you're getting into renovations like Dennis here, you would have to work out what capital also is needed for something like that. So what we're trying to say is you have to come up with a plan first. And if you're starting off, we wouldn't want you to go into a project like Dennis is doing right now. I mean, this is a $550,000 purchase. He put 20% down. He raised the money from a refinance from the last burr he did and he bought in the Northeast. He bought in Marlborough where people aren't looking. And I can tell you there's some good areas in Marlborough. And Marlborough went up, another community 2 years ago, went up over $100,000 and he bought on one of those streets, renovated and did the same thing. But we wouldn't even tell you if you're a beginner. We wouldn't even tell you to go do this. We would start you off in a townhouse or a half duplex. And the reason why we would do that is because you're putting less money down, so less capital. And we would hope to actually find you an illegal suite of property where over time we can turn that into a legal suite of property, but hoping the kitchen and everything's already there so it wouldn't cost us much money. Just by adding that suite, you can add the value on to that property and grow your equity a lot faster. So just understanding where you're at, that would be the first step. So talking to someone like Danielle, working out, okay, well, what can I afford? Then secondly, working out, well, how much capital do I have to raise? And then you have a goal in mind to raise that capital.
Yeah, and the key there is clarity. So how much capital? What are you going to use it for? Do you have a track record of doing this type of thing before? Dennis there, of course, he's got a track record of doing renovations and doing the burr. So it would be easy for him to attract partners with capital to do it again. He's very particular. His renovations are very capital intensive, so they cost a lot of money because he wants it to be, very,
Perfect.
very nice.
Yeah,
Perfect. Yeah.
perfect. He's an engineer, so yeah.
We've been in some
Yeah.
some quick renovations. There was a
Yeah.
project, a fourplex in Huntington Hills we were in last
Yeah.
month, and the actual workmanship was quite poor.
Yeah.
So that's not something Dennis would do. But if that is your goal to turn these places over really, really quick, and the workmanship doesn't really matter to you, you will need a little less capital, but it needs to be defined how much capital you need.
Yeah. He's so perfect. He rang us and said, should I put an extra window in the living room in the basement? We're like, no, you don't need it. There's already one there. And sure enough, we were down there and he's putting another window. So he goes the extra mile. But the last thing I want to talk about here, which could help you guys really take some stress away. If you've read our book, Fearless Real Estate, we discussed this in there that when borrowing, you can borrow more than you need. So I would always borrow for a project more and then factor in my worst case scenarios going forward. So meaning if there was a vacancy, I could pull from those funds. So I could run the business. I remember when I first borrowed $100,000, I went out and used $66,000 on, I think, 6 houses. And then with joint venture partners. So I had partners that were putting money in as well on some of them, some I paid. But what I did with the remainder 34,000, I used that as a slush fund for my business. Okay, so if there was any vacancy or any maintenance, I didn't have to stress. I didn't have to find that money. It came out of that pool of money. So always think about that. Maybe borrow a little bit more. Whoever you're borrowing it off, that's fine, and it can help you go a long way.
All right. The next thing is understanding the different types of capital available. If you're a beginner out there, there's many, many different sources of capital out there. We'll go through them, a few of them here, but you're not just limited to one source of funds. So, Carly?
So most people already have access to capital. So maybe it's equity in your primary residence, maybe it's equity in a rental or your business. So that would be the easiest in the first place to look. Maybe it's your parents. So maybe your parents have a house that is paid off and they could take some of that money out tax-free to help you get your first place.
Yeah, that's perfect because you know what? We know parents will be helping their children a lot more going forward. And we actually did a session last 2 weeks ago that to get into the market, Tim, yeah, you had the affordability slide.
Yeah.
And it's really like we're just saying how affordable Calgary is. To get into the market with 5% down, if that's where you're starting off, it's not that bad. Like, and you can even get into the condo market and cash flow with 20% down and 2-bedroom condos in Calgary. You can get them under 250,000. So you can start, and people always think, where should I start? Just getting in the market is key to answering your question. But some of the other ways to raise capital, lines of credit. We've had people actually buy homes with lines of credit. That is a way you can go out there. We've had people hit different banks on the same day and open up different lines of credit. Now you have to know what you're doing if you're doing it that way, but we have seen investors go and do that. And other ways of looking at getting capital is through your RSPs. That does take a little bit of time. And when you do release those funds, and if you're borrowing money off a JV partner, those funds generally have to sit in an account for up to 90 days. Just so everybody knows, it takes a little bit of time to get the money out and follow the rules with those funds. And then the last one we've got at the bottom here is hard money lenders. And we do have experienced investors. We have many actually using hard money lenders. They're doing renovations, but they have a full team. They have a full system. They're full-time investors and they go in. We have a couple of companies now. One of them is Calvert. that we go in, and Calvert actually runs their numbers to make sure that the deal is kosher and that it's going to be win-win for everybody. But if you haven't done it before, we wouldn't suggest that. If you haven't done renovations before, we would suggest you buying a property that's a little older and renovating that property. You may renovate the basement or you may renovate upstairs and living in the property so you don't have this stress of renovating and trying to flip a property without ever doing it. And then imagine having hard money on top of that. So, so we wouldn't go down that road. But these on this page here, these are the most common ways people are finding capital out there. And existing equity, I mean, if it's there, if your parents have it, as Carly was saying, you know what, you could help them have another investment as well and make it win-win if you're going to use their equity.
Yeah, and speaking of renovating while you're living in it, on this slide we've got Connor here. It looks like Azad's lecturing him. He's not actually lecturing him, but Connor lived in this house behind me. He lived in the basement, renovated the upstairs, and then moved up and renovated the downstairs. And he did a lot of his renovations with a Home Depot credit card, which you can get up to a certain amount of funds on it, and it's interest-free for the first 12 months or something like that.
Might be longer.
So he borrowed the money on a credit card for the rate for some of the renovations and didn't pay any interest on the funds because he paid them back within a year once he had the place rented out. So there's many, many ways to access capital, whether it's anything on this list here on the page. There are, interest-free credit cards. Well, they're not interest-free forever, but they're interest-free for a certain period of time to building centers that you can borrow money for the building materials. There's all kinds of ways to raise that capital. You just have to get out there and find it. And if you having trouble looking for it, just give us a call. We can point you in the right direction. Okay, next, where do you find these investors?
So you can find investors anywhere. They may just not call themselves investors. So typically you're going to find them in your network. Personal story of mine, I had a good friend from university. He lived in Nova Scotia, but was interested in the Calgary market, especially when things were kind of going crazy after COVID. So we would chat about it every now and then. He'd be looking at stuff, and I went and saw a condo. So I went to see a condo that was already an Airbnb. It was for sale in Bankview, being sold with all of the furniture, everything down to the cutlery. And so I saw it, the numbers worked, I loved it. And I called him up and I said, do you want to do this? So it was more of a joint venture, but it was a no-brainer. I had already had Airbnbs, so I had experience managing the Airbnbs. At that time, I was leveraged, so I needed him to get the mortgage, and he could do that. And so we did it 50-50 and worked great.
Yeah, that's a nice story there. So, at the end of the day, I love approaching homeowners because homeowners, even if they just own their one home, they're already investors. Like that's what Carly's saying, I guess. They don't even know they're investors, but they are. And the thing about approaching someone that owns their own home is that you're asking them to take equity out of their home to buy more real estate. So they already believe in it, and they know where the market's gone. And with your expertise, you should be there showing them where you think the market's going to go and why they should get in the market as well. I mean, even at 3% growth rate that we had last year, at 3.5, $400,000 property appreciates to $1 million over a 25-year period. So if you show someone that, they don't even have to wait 25 years. They could, you could pay them a return. And that's what most people are after. When you look at how their RSPs are performing, people are looking for that extra income. And if you could borrow money off them, borrow their equity and pay them a return on a monthly basis or a balloon payment after a 3-year period, you know what? You're giving them that extra cash. And we know with inflation alone, and we say the cost of steaks these days, like we got a buddy in the office, he's got one of those smokers. I don't know how you guys have smokers, right? Because the meat is so expensive. We talk about steaks and when they're on sale all the time with this guy. Anyway, it's so expensive, and it's so expensive for people out there. We're talking about just going to a hockey game. I mean, a glass of wine at the hockey is something like $18. It's like ridiculous. I couldn't believe it the other night. And so if you can help someone make extra income just by using their equity and using your skill, it could be win-win for everybody. And once you get good at it, you can approach more people. But as Carly and Tim were saying, generally these people come within your circle. So we have to stress that. Like, yes, I know at our forums, people are meeting each other and do joint ventures that way as well. But most of the time, whenever we've done joint ventures, it's been through someone we know.
Yeah, and well, what we're trying to promote now with our in-person seminars, we've got one coming up in June, and then another one in the following November, is we are trying to create this community where the investors get to know each other so that they're broadening their sphere of potential capital partners. And you can see in this slide, it's when we were showing a bunch of investors through student rental, and they get to know each other as people, and they're not just someone at this different table looking at someone presenting a seminar. So that sphere of influence can be any amount of different people. When we first started doing this seminar years ago, this slide, when we said where do you find investors, we would just list professions: lawyer, doctor, accountant. And we did 150 professions, and that was the slide.
Yeah.
So it basically means you can find investors to lend you capital pretty much anywhere. It's anyone that you know doing whatever they're doing. It's not one particular group of people, one income level. Lots and lots of people want a return on their capital that they're maybe not getting in their current RSPs or retirement account.
Yeah, and just one thing to focus on here is, once again, you're not asking for money, you're asking them to jump in on opportunities. So
Yeah.
keep that in mind.
Carly?
Okay, so how do you start those conversations? There's not a magic way to start it. It could be you're in the lunchroom with your coworkers, or you're at a event, and just asking somebody, like, do you have interest, or have you ever considered investing in real estate? And maybe you've never had that conversation with somebody before, and then that opens up like a whole new conversation that you didn't know was there.
Yeah, and no matter where you are when you're talking to these people, you could be at a party, you could be at a work function, you could be at work, and you can hear one of your coworkers complaining about a tenant that he has. There's an opportunity to approach that person, have a conversation about your shared interest in rental properties, and he could become an investor down the road. You just never know. You have to strike up these conversations with people, and like Carly said, you're not asking them magic words. Just simple questions like we've got here on this slide, 3, 4, 5 word questions, and you will engage their interest in real estate investing in within 5 minutes.
Yeah, like lately, I know at the end of the golf season last year, whenever I was golfing, I was always talking to in the group, like, how much are you putting aside for your retirement? It was just, I mean, I'm at that age now that I'm thinking 20, 30 years down the road, but it's just an easy conversation to have. Like, well, what are you doing, and how much do you need, and what kind of return, and then how much do you need every month to live off? What's your lifestyle look like? And I've got buddies that want to go live in Mexico, or I was just in Vietnam over the Christmas, and I'm like, wow, I met so many people that are Canadian American living over there for the winter months here, I guess, because it's so affordable. You can live in Vietnam for $1,000 a month. I didn't even know that. And that's with everything. So, having those conversations, I mean, they're the conversations I have with people. Well, what's your retirement look like? And how are you going to get there? And I can map out with myself that, you own a number of properties and the equity is getting paid down. And then by then the property should be worth about this, and the mortgages will be all the way down here. And then this is what I'll be cash flowing. At the end of the day, I'm not even asking them if they want investment from me. They're asking me, well, how can I get into that? And it's just having those conversations about the numbers and about life and about right now it's inflation and affording to, be able to go on holidays, right? Like you look at you were just in Mexico last week.
Mhm.
You can't get into an all-inclusive anymore for under $150 per person, I don't think, per day, roughly. And when, like, I have a family of 5, Tim, you got to stay big toe. He's got a massive family. And what's funny is my brother's actually got grandkids now, and he takes his whole family. Like, he's got 4 kids, they got grandkids, and they take 14 plus the partners, like 14 of them on a trip, and it costs so much money. And I'm like, well, that's so cool that he does that, and how I'm like, how much money does that cost? But anyway, if you look at what you want out of life, it doesn't matter what you want. That's why we always say you need a why. If it's a bigger home, well, then how are you going to get there? And then you got to look at your partner who you're raising capital off. Well, it may be someone who's retired, like who I went to my mum who's retired, and now that's helped her in her retirement um, be able to travel. Like, I don't know how many cruises she's been on. Every time I call her, she's going on another cruise. And to be able to have that lifestyle and borrow money off her that she wouldn't have done anything with, she would have just paid off her property, really. And now she gets a return and she's able to do that. So
Yeah, the 2 gentlemen on the right here, Mark in the middle and Paul on the right. Mark's retired, Paul's his son, and they're partnering together.
Yeah.
So Mark doesn't have the ability to qualify anymore because he is retired, but they partner together. He qualifies, and Paul provides the capital. The guy on the left, he's just some crazy tenant. He got in the picture. We don't know who he is, but he's there. But it's the 2 guys that they're still raising capital, even though one of them's retired.
Yeah, and just so you guys know out there, like this lot, we bought this for them. This is a builder's lot. It's in Huntington Hills. We got a good deal on it. It's probably gone up since they've bought it. It's probably gone up 200 to 300,000. So when you think about, and Tim, now they've owned it for about 6 years, so it's gone down roughly around another 50,000. So it's made them 350K in 6, 7 years. I'm telling you guys, the average Canadian retires on between $200,000 and $400,000 at retirement. That's the average Canadian, okay? Between 200 and 400,000. Well, Mark here has just made at least half of that, right? I mean, he was a rocket scientist or something. Anyway.
He was a rocket
He
scientist.
was a rocket. So he's made enough money. But I'm just saying, this stuff can be life-changing. And you might be thinking, well, the market's soft. Where's the market going? It doesn't matter what the market's doing. It's going to go up over time. We know that. You guys are on the call because of that. You just want to find out how you get involved. So we know what's going to happen in the market. We know the average today is at 615,000. We know the average should be around 850,000. We just don't know when it's going to get there. I'll put money on it in the next 5 to 10 years. It will be there because the trends have always shown that. Compared to Vancouver and Toronto, we've always been around 75% worth of where they're at, and we're way below that right now. So what happens if you study the CMHC guidelines or the graphs, what happens there is we eventually catch up, and it's happened time and time again just because of affordability. So if we know that, you can definitely help people like Mark here.
Yeah. And then the next point you want to figure out is what's in it for your investor, right? Are you going to give them a return? Are you going to give them an ownership piece? Are you going to, have an exit strategy for them? So when they're lending you money, what they're looking for is the 3 things I've got here: return, security, and simplicity. They're investing their capital to get a return, right? Now, whether that return is a percentage or an ownership piece, it doesn't matter, but they're looking for a return, and you're offering them a good return so that they can place money with your project.
Yeah, this is where you're going into it and knowing. That's why we said straight off the bat, you have to know your plan. So this is where you go to the investor. I know Carly does a lot of business in what community would it be?
Charleswood.
Charleswood. Let's pick Charleswood. We know Carly's in Charleswood. So if Carly came to us and said, hey, I want to do this flip in Charleswood, I need $120,000. Well, we would be looking at it. We know Charleswood is a solid neighborhood, right? We know flip properties can go over $1 million, right? So we would be looking at that saying, okay, well, what are you going to do? How much are the renters? So by having that security, knowing we're getting into a good neighborhood, knowing that she's already told us childhood, she's not coming back later on saying, well, now I'm going to get a condo in the Beltline because it's so cheap. We'll be like, oh, okay, well, hold on here, right? So you got to have your story up front. You got to keep it. Tim's got simplicity here. You got to keep it simple. You got to know how much you're borrowing, what percent you're paying in return. I generally like a 10% return. I know that interest rates, if they're borrowing it from their equity, depending where the money's coming from, some people may be lending you cash, some people may be refinancing. So you have to structure it in a way. You can do balloon payments, so you could pay them a return monthly, or then you could do a balloon payment at the end where it's calculated. I love balloon payments because you can let the property do its thing, you can add value to the property, and then you can sell or refinance to pay your investor out. And there's not a lot of money up front. The second tip I want to give you is that you can factor in the payment into the amount you're borrowing. So if you're borrowing $100,000, you may only use 60 of it, and then you may use some of that to pay the return over time. You're allowed to do that. There's no rules, but you have to be upfront with them. You don't have to be upfront on where the return's coming from throughout the process of it, but you have to be upfront on where you're buying and what you're doing with those funds. And they want to know how much security you have. Okay. So I know when I borrowed, I didn't go to, my mom had paid off her condo at the time. I think it was worth 800,000 back then or something like that. I didn't go and say, I want 600,000. I went and said, I wanted 100,000 because I knew worst case scenario that 100,000 on a line of credit at that time was going to cost me $600 a month. So I knew I could pay her a balloon payment in the end, and I could maintain paying that equity. So I didn't want to, you never go to someone, put more pressure on them to borrow the funds, and then they have to come up with paying, looking after their debt. No, you have to look after their debt. Okay. So I knew even back then as a chef, my worst case scenario, I could afford $600 a month. So I went to her and I said, look, even if things went sideways here, the money's protected. I could sell the assets, get the money back out, and whatever I'm on the hook for, I can pay you back. And not only that, I can maintain that loan throughout this whole process. And just for you guys to understand what something that like that looks like, we did go buy 6 houses with joint ventures here, all back then, all for around 200,000. All of those properties doubled in value, even more. They went for 450,000. And my 10% on 100 grand was nothing. Okay. And then I even looked after the equity on that. So it was even more at that time. So you know what, when you add all of that up over a 3 to 5 year period, I went to give the money back to my mom. She said, I don't want it. You keep investing, you just keep paying the 10%. So that's what some of these people just want. They just want extra income, and you have to give that security. You have to sit down with them. And when it does come to taking the money, understand how you're going to pay them back. Worst case, how you're going to register those funds either on your current home. So it's easier if you have your own home. Am I getting too far?
No. That's the security part.
Yeah.
That's the security part of it. I got a story about that, but here.
Yeah. So you should, if you have your own property, you will be, depending on the person, right? You'd be registering on your own property. So then that 100K is registered. So there is security for that. Or at the end of the day, you could even put them on title on the new property if you really wanted to.
Yeah, one of my earliest joint venture partners, Tara, we bought 2 houses together, and she put up the down payment on each of the rental properties. So what we did is we were 50-50 joint owners on those properties. She put up something like 60,000 on the first one and 80,000 on the second one. And what I offered her on top of that 50% ownership is, does she want to register that agreement we had for that down payment on my primary residence?
Mhm.
I gave her that opportunity. So then she has the security of the ownership portion of the house that we're buying, plus it's also the agreement's also registered on my principal residence. So she has that double layer of security.
Mhm.
She declined that, but I presented it as an option, because if she was hesitant about, well, what happens if the property value goes down,
Mhm.
but she understood the real estate market enough that she knew where it was going to go. But I offered that to her, and people can offer, their potential investors that to give them that extra layer of security to secure their funds.
Yeah, and even if the market went down, at the end of the day, if you borrowed, say, 100,000 and it went down and you lost money on it, you're not losing the whole 100. That's what you guys need to understand. And if you're working with us, we're buying you properties. That's our job for our investors. We're buying you a property that's making money on the way in. Like the property Dennis is doing in Willow Park, we got for 550. City assessment on that property alone was 686. Okay, so like we're buying properties that are making our clients money so they can afford to take on raising this capital and paying a return. So that is key. Write that down. You're buying properties that are making money on the way in. Okay. So when you're borrowing those funds, you're secure already. And if your JV partner, I mean, your partner was a lawyer, right?
Yes.
So she would have came after you anyway.
Yeah.
But worst case isn't worst case. Like you look at this and you say, well, I owe 100 here. And you have to remember first money in is always first money out. So it doesn't matter. You register in such a way, the bank is always at the top. You need to understand that, okay? So the bank gets their money first. So as soon as you have to sell, the bank gets paid out first. And then the joint venture partners, which in that case it would be, even though you're just raising capital, or there may be a 50-50 owner. First money in is always first money out. The money is held in trust. So it's not going anywhere once it's registered on title. And we help our clients do that all day long. We work with Admiral Law that makes sure that the deal is secure for everybody involved.
Yeah, and the last thing on this page is the tax benefits for your investor. If they're a co-owner on your real estate investment, guess what? They can enjoy the same tax advantages that you can. They can deduct all the expenses that go into that. Well, their 50% share of the expenses that go into that rental property. If they just put the money in, they don't have an ownership position, guess what? It's an investment. They can deduct the interest on that investment because it's an investment in real estate.
Yeah.
So there are tax advantages that you can let your investor in on. And, along with their return, there's also getting tax benefits as well. If you want to, we really delve into that in our tax seminar, which is usually right at the end of the year, or is it?
Oh no, we normally do it now, like this time of year. I'm gonna get
Yeah. Anyways, so if he has enough time, because tax time's coming up.
Oh,
so
geez.
anyway, so we really, really delve into the tax benefits of real estate investing in that seminar, but it is something that you can, present to your investors and benefit for them.
Yeah, and you guys, if you have any questions, put it in the chat. I know it's a lot of information out there, but we're happy to answer anything.
Okay, the next thing you want to do is you want to be able to do this over and over and over again.
Yeah, people want to invest in systems that can be repeated. So if you have a history of making money in real estate by using other people's money, then you want to showcase that. I'm going to have a lot better chance of getting somebody to give me money if I can show them a project or a few projects that I've done that have followed the same process.
Yeah, no, that's great. And you know what? Having our forum, it was in the fall, was it November? In November, yeah. Having our forum and having close to 100 people in the room at the Blackfoot Inn in November, it really made us realize that those events really make it easy for people to come together and talk about how they're doing these things, and just belonging to an investment group like us, or working with an investment group like Calgary Real Estate Wealth. It actually helps our clients showcase it and replicate it even more. And when I say that, our investors normally own on average 4 to 5 properties, I would say. And the investors are getting younger and younger. So don't think, if you're 22, 23, we've got these young kids that will live in the basement, as Tim was saying, like they'll house hack. So they'll rent out the upstairs, they'll rent out a room, they'll rent out the garage, and they'll make enough money to replicate it and do it again. And if it's the bank of mum and dad that are helping him, so be it. Like mum and dad are in on it as well. So you got to be able to set something up, understand what you're doing, make it win-win. That is key. And understand the process, and then actually go ahead and repeat it.
Yeah, and if you haven't done any deals yet at all, What thing you need to do is focus on the preparation and the process. So if you do your research, you research the market stats, you find the deals that are out there, you analyze the deals, you have everything ready to go, then you can present your opportunity to an investor a lot more realistically than just asking them for money, like we've said in the very beginning. The preparation is the key. Whether you're an experienced investor or a beginner, present everything in a business-like manner because that's what you're doing. You're getting into business with your partner when you're raising capital from them. So even if you don't own anything yet, if it's business-like and you know your numbers and you know your communities, you know the investment properties, you'll be in a lot better position than not doing your homework.
Yeah, so okay, this comes to the next slide, which I really, really love. And the first time I put this together, I got turned down. So I have to be honest with you. I approached my wife's uncle who owned a bunch of John Deere dealerships in Winnipeg at the time. And I'm thinking, this guy is loaded. He actually really is. He's family. And he's like, yeah, like we'll go out for breakfast. He took me to his breakfast place. And I pulled out my prospectus and I was like, yeah, this is what my corporation wants to do. We're going to go buy all these properties, and this is what I own, and this is where Calgary's going. And then at the end of the breakfast, he's like, Azad, he's like, I love you, but I don't want to mix business and family together. And I was so deflated. I was like, oh no, like I thought it was the end of the world, you know. Anyway, best thing ever, because you know what? Sometimes it's not meant to be, and that's okay. And it's same as real estate. Like we're realtors, and we get neighbors and friends, and not really family, but neighbors and friends use other realtors, and it's like, oh, they use someone else, you know. But when you've been in the business as long as us, 20 years, you don't let that bother you at all. But building a prospectus, what it's all about is putting together a portfolio to showcase who you are, what you're going to do, and why you're going to do it, and how you can help other people. I would go to Staples, I'd buy like a leather, you don't even need a leather binder, but I had a leather binder and it had the
Yeah,
slips in it.
as I used to bring it to all these seminars, it'd be
Yeah,
this green thing, and it looked like it was from the '60s. He
yeah,
looked,
yeah.
he looked like he was in Mad Men or something. But it was,
Yeah.
anyways.
So the reason why I do that is I'd sit down with investors and I'd flip through this folder. I'd sit them down and say, yeah, hey, like I want to show you what I'm up to. And so it would go through at the time. I think I had a whole bunch of properties. I was building pre-construction in Lower Mount Royal with Flux Developments. I was involved in a bunch of things. And so I would showcase what I was doing. At that time, I was even lending money out. So I was using my equity, giving it to developers. They were paying me like 24% on my money on my as a return. So I was the bank lending money to developers until I lost a whole lot. One developer went under and boom, there she goes. So anyway, so I'm not saying to go do that, but you have to start somewhere. And I can laugh about it because I've done all these things, and Tim and Carly have done these things as well. But in this folder, you want to put in the Krebs stats. You want to actually put in information that you're working with Calgary Real Estate Wealth. You actually want to put in the properties you own and what kind of equity you have. If you're in some sort of position at work and you want to divulge your salary so people know, they want to know your net worth if they're going to invest with you. And then we have engineers that use our what performance
Investment analysis.
investment analysis. We would get you if Carly was going to raise capital for a Charleswood project. We would actually, and you could showcase one of the properties you sold, right? We would showcase, you know, the property, what it was bought for initially, what the renovations cost, and then what all the selling costs were involved, and then the profit at the end of the day. And then we would just showcase that. We would take a property in Calgary. I mean, we're going to release the video this week on best communities to invest in Calgary. But there's communities that are going up in value. There's segments of the market that are going up, like the townhouse market, the duplex market is going to go through the roof in the next couple of years only because it's the most affordable price point outside of a condo that nobody wants to live in. Okay, so the townhouse market is the next first time, or what do you call it? First time home buyer?
Starter home.
Starter home. The townhouse is the new starter home for most people because it's more affordable. And then the semi-detached properties are going to continue to go up because that's the next affordability if you're going to get into a home. So I would actually put that in there and showcase the growth. I mean, a couple of years in a row, the townhouse market went up 14 or 16%, right? So 14% in a down market, like the overall market went up 3.5% last year, but the townhouse market went up 14%. Okay, so that's what we're getting at. You guys are the experts, we make you the experts, and you put all of this in a binder. And that's why having that initial plan saying, yes, I'm going to go out buy a half duplexes, right? And I would be doing that all day long. Because the funny thing about half duplexes, they rent just as much as a detached home, but you're paying less money for them. Yes, you don't get the appreciation, but later on you get maybe the possibility of buying the other side. So now you own a fourplex on a good lot. So, showcasing all of this stuff to your investors will just help you get them to say yes. Like if and that's what you're doing. You're becoming the professional. You're showcasing it in a binder. I mean, you could do it on a
Well,
on
just so you
iPad.
guys know, my kids laugh at my binders at home.
Yeah,
They tell me, just get it on an iPad, Dad. You don't need all this paper and all that.
yeah.
But no matter what form you put it on, just make sure all the information is in there.
Yeah, we're not cool anymore. When your kids are laughing at you, it's like, oh. But it worked, right? I don't know. Yeah, put it on an iPad, send it as a PDF. I don't know. Do whatever you got to do. But illustrate that, you know what, this is where I've been. And if you haven't been and you're starting off, this is what I want to do. This is why. And then also in the prospectus, things that I love putting in there is just good stories for Calgary, meaning population stories. If people are moving here, we used to put companies used to move here, head offices, put that in there, put like the infrastructure that's being built, like stuff like that. This is why Calgary is a great place. You could even put crime stats. You could even pick a community. I know with my father-in-law, he when I asked him for money, I asked him for a project in Lower Mount Royal on 18th Street called the Mantra, and I was building pre-construction in there. But I actually brought him here, brought him downtown, and said, "Look, this is the Red Mile. This is where all the bars are and everything like that." I know where I'm from in Sydney, Australia. If you're one block off, say Bondi Beach or Paddington or Oxford Street, anywhere like that, the real estate just goes through the roof. So, for me, it was easy to bring him here. And we always say this, spend time with your partners. Don't just ask them for money. Show them what you want to do. Get them excited, right? They can feel it. I took him here. I showed him Mount Royal. I said, you know what? There's $5-6 million homes up on the hill. And then you have the coolest street in Calgary below it. Lower Mount Royal is the next best gig. So, you know what? He couldn't write the check fast enough. I made him money on that project. I must have made him like 150 grand. As I said, he went and bought a vacation home on the lake, that was his dream, And now what we were saying about the replicating process, I can just go to him if I want to for my next deal because you know what, I made it win-win. I was transparent. I took the time with him, and everything I said excelled. It actually excelled what he was after at the end of the day.
Yeah. So the last thing in here is your property analysis. Just make sure that you use accurate numbers on that. Don't use these, wildly out of proportion appreciation numbers. We've seen in the last couple of years that some investment groups, they were using, huge appreciation numbers in their analysis, and it skewed the numbers as you went out in years. Like 20 years from now, these $400,000 homes were going to be worth $2-3 million, which was not realistic at all. So use realistic numbers. We provide the stats every 2 weeks on our market update. If you really want to know what our projections are for, whether it's rental rates or property appreciation percentages, we can tell you, and you can put those into your analysis so that you're giving accurate numbers to your investors. There's nothing worse than a presentation that's weeks on and the numbers are just blown out of proportion. You have to use realistic numbers. That's the final thing about that. The next one we're going to talk about is the title of this slide is "The Capital is Out There." It's up to you to go out there and find it. Capital is everywhere. People are looking to invest their money, as Azad said, for their retirement, anywhere that they can get a better return than the rate of inflation, which has
Yeah.
been massive these last.
Or even your RSPs,
Yeah.
how much are they going to grow by?
Yeah,
Right?
exactly. You know, your RSPs are invested usually in very, very conservative funds, whether it's through your work or whether it's on your own. People don't, they're very risk averse when they're putting their retirement money in something. And for us, real estate is something that's, you know, there's not too much risk in it if you take care of it.
Yeah, and I could definitely tell you for the three of us investing in real estate, that equity is key. It's tax free. We've been able to live the lives we live because of that equity. You can pull it out. You could, we've upgraded our own homes with that equity. We've bought nice cars with that equity. So we've done it. These three gentlemen here, the boys, they went on to own multiple properties. And we didn't even like their structure. We like 50-50 deals. They were doing like three-way deals because we just feel it dilutes the profits at the end of the day. They didn't care. They went on, they bought a whole bunch of properties in Calgary. And we were so proud to be part of it and select each property with them. But you know what? They raised the capital. Like they went out there, they had people in Toronto that wanted to invest in Calgary and they found the money and now they own multiple properties, right? So if there's a will, there's a way. You just gotta get uncomfortable get comfortable if you're uncomfortable, I mean, and go for it. I mean, you're there to help someone. That's the way I see it. Like you're offering them to get into something that you have the expertise in, you have the team to actually pull this off and make you money. And at the end of the day, that magic thing happens, and it does happen every few years or every couple of years, where the market just goes up, and you know what, you make that huge amount of equity. But if I was getting into this borrowing money again, I would try and do a minimum 3 or 5 year term. I wouldn't do it under three, because if the market stalls, you know what, and you can't pull that money out, you can always extend. I've had to do that on some money that's been that I've borrowed. Sometimes you have to extend, but you have to predict what's going on with that.
Yeah.
I think just being curious, we've already talked about that the person who's going to be investing is probably somebody who's in your network. So just ask those questions, be curious, have those conversations.
Yeah. And one of the points here, rejection is part of the process. Azad went through an example of him getting rejected. Everyone who's been investing in real estate and had to go out and raise capital, guess what? You're going to get rejected. Even if it's getting rejected from a bank when you're looking for a line of credit or you're looking for your fourth real estate investment mortgage and they say, no, you don't have a high enough income. You have to understand that rejection it's normal. So what you have to do is you have to really steer your efforts to somewhere where you can raise that capital. If the banks say no, guess what? There are people out there that will lend you the money. It might be at a little higher rate, but you can go out there and find the capital. If you have the will to go out there and increase your real estate holdings, guess what? You know, the sky's the limit. Just keep going, keep raising capital, keep acquiring more properties. And you know, you whether it's just 2 properties, whether it's 3, whether it's 4, we've got investors that have, you know, hundreds of doors. They just keep going. They don't let that rejection stop them or slow them down.
Yeah, and they have to keep raising capital. You might think the guy that owns over 400 units, he still has to raise capital. So, at the end of the day, don't think if you're starting off, it's going to get, it does get easier, but it depends how far, how big you want to go. Most investors have to go through this.
Yeah. So finally, why does raising capital matter?
Because you need money to buy real estate.
There you go.
You need money to play the game. So you wanna have that capital because the deals aren't going to wait for you. You need to be ready so that you can jump on them when they're present.
Yeah, and in Calgary in particular, raising capital is not that difficult. People understand, you know, if you've been in this city for a number of years, you understand that the price of real estate has gone up year after year after year after year. Yeah, it might go dip for a year or two a little bit, but in the long term, real estate prices have increased huge in Calgary. So people understand that if they're looking to place their money somewhere, they understand that real estate in Calgary is a very, very safe place to park your money, and you will get steady returns.
Yeah, like back in the day, we were just relying on oil, right? Now there's so much diversification here in Calgary with different sectors, like the tech sector. At the end of the day, Calgary is a great place, and it's your job to get that across to people that are going to lend you money. And then, what gets better about investing is you get to a point where you're producing enough equity, or you can raise the capital on your own through your real estate. So, and that's the goal, is to get to that point where you don't have to go raise capital if you don't want to. I'm at a point now where I'm looking to use equity in investment properties to pay down my primary, just because I'm getting tired of the huge mortgage payment. So at the end of the day, you know what, that may be a goal of yours, is to pay off your house quicker, and maybe, as I said, when we were starting off 20 years ago, it may be to get that bigger house and use the equity in your properties to get that bigger house. So whatever your goal is, you have to raise capital to get there. If you're not there, if you don't have it, your job's not supplying it. And we know most Canadians right now are living paycheck to paycheck. They don't have a plan B. So real estate can just give you that. And that would be a good enough reason to get into it. Having that flexibility, knowing that if things did go sideways, that you could sell off some assets and be fine. Just having that comfort is totally worth it as well.
Yeah, and the hardest part of raising capital is getting that courage to go out there, put yourself out there, and ask for it. We've all had to go through it. Most people on the call have probably had to go through it. But once you get comfortable with asking for that capital, and once you understand how to go about it, present it in a business sense, it gets easier and easier and easier. And then once you do raise that capital, like we've said before, the sky's the limit in your real estate holdings. Because if you run into that roadblock of not being able to qualify or not having enough money in your bank account, guess what? There's someone out there that would be willing to invest with you to share on those future returns that you're going to get in real estate.
We hope you liked tonight. We didn't see any questions really come through. But if you need to reach out to us, our digits were up there. Just reach out. And if you know anyone wanting to buy, sell, or invest in real estate or lease a property, let us know.
Yeah, and if you need any tips on raising capital, everything we went through on this seminar, just reach out. We'll be happy to set up a meeting and help you move your real estate investment career forward by raising capital.
Awesome.
Okay, see you guys in a couple of weeks.